This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. China's daily crude oil imports were up 8% in August from July, customs data showed on Tuesday, as refiners increased purchases, betting on robust demand for fuel oil products. China, the world's top crude oil buyer, brought in 44.53 million tons of oil last month, equivalent to 10.49 million barrels per day, BPD, according to data from the General Administration of Customs. That compares with 9.71 million barrels of oil per day in July, but was still lower than the 11.18 million barrels of oil per day imported in August 2020. Crude imports for the first 8 months of 2021 reached 346.36 million tons, about 10.4 million barrels of oil per day, down 5.7% from the same period last year.
The head of Russia's number 2 oil producer Lukoil said that oil prices of $65 to $75 were comfortable for consumers and that the OPEC Plus group of leading oil-producing nations was striving to maintain that price range by regulating output. In an interview with the Kommersant newspaper published on Tuesday, Vagit Alekperov said curbs on oil output would depend on market conditions. Regulation of output can be different depending on the situation, Alekperov said. For now, September 2022 will mark a milestone when the restrictions should phase out. The company has up to 90,000 barrels a day of idle production, which we hope will be needed by the market.
Moving on to the top news in the energy sector.
Thermal coal prices across Asia hit new highs this week as China and India restock critically low inventories to meet robust power consumption, industry sources said. The most traded thermal coal futures contract on the Zhengzhou Commodity Exchange jumped more than 4% on Tuesday to a record high of 979 yuan, $151.63 a ton. In India, prices of better-burning U.S. thermal coal, 6,900 NAR, in North Indian retail markets have risen by a third in the last 15 days and are up by more than 100% from a year ago to 14,600 Indian rupees a ton.
Oil prices fell on Tuesday, extending losses from the previous session, as Saudi Arabia's sharp cuts in crude contract prices for Asia sparked fears over slower demand, but strong Chinese economic data and U.S. output outages capped losses. Brent crude futures were down 27 cents, or 0.4%, to $71.95 a barrel by 11:35 GMT, after falling 39 cents on Monday. U.S. West Texas Intermediate crude was at $68.53 a barrel, down 76 cents, or 1.1%, from Friday's close, with no settlement price for Monday due to the Labor Day holiday in the United States. The deep cut in Saudi OSP and the aftershock of Friday's disappointing U.S. jobs data that strengthened the dollar yesterday were enough to put bulls on the back foot, Thomas Varga of oil brokerage PVM said.
Next, we have the top news in metal markets.
China's iron ore imports in August picked up for the first time in 5 months, rising 10.1% over July, although demand remained lackluster amid Beijing's steel output controls. The world's biggest iron ore consumer brought in 97.49 million tons of the steel-making ingredient last month, data from the General Administration of Customs showed on Tuesday. That compared with 88.5.
China's copper imports in August dropped 41% year-on-year to their lowest since June 2019, customs data showed on Tuesday, as high prices and sluggish economic growth kept a lid on demand. Arrivals of unwrought copper and products into China, the world's top copper consumer, were 394,017 tons in August, the General Administration of Customs said. That was down 7% from a month earlier and the 5th straight monthly decline. Chinese customers are not willing to buy copper at these prices. We saw buying below $9,000 a ton, but anything above seems pretty expensive, said commodities broker Anna Stablum of Morex Spectron. We will now look at the top news in the agricultural sector. France faces its lowest wine output since records began after vineyards were hit by spring frost and disease, the Farm Ministry said on Tuesday. It forecast production at 33.3 million hectoliters this year, down 29% and 25% below the average of the past 5 years. The spring frosts cut down a good part of the production, which will be historically low, below those of 1991 and 2017, the ministry said in a statement. Diseases had accentuated the losses, it said. French wine output in 1991 and 2017 had also been affected by severe spring frosts.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.